Hello everyone, welcome to my channel hdorionn. We are studying accountancy for class 12th from T.S. Grewal's textbook 2023 edition, volume 1, accounting for partnership firms. Chapter 2, Goodwill, Nature and Valuation. And in this video, we will study calculation of goodwill by average profit method when past adjustments are made. So let us see some questions from the textbook. So in this video, we will learn calculation of goodwill by average profit method, but taking past adjustments. So what are these past adjustments? We will understand. So past adjustments means some mistakes are there in the calculation of net profit of those particular years, and we have to rectify those errors and calculate a normal net profit of that particular year to calculate goodwill. Now, what is this normal net profit? Is that abnormal profit or loss of those respective years we have to eliminate, because abnormal profits or abnormal losses are not regular in nature and they will not happen every year. They happen once a while, accidentally or by chance, or as per the circumstances it has occurred, and which has resulted into increase or decrease in profit. So we have to eliminate such type of abnormal profits or losses and calculate normal profits for the year, and then average profit is calculated, based on which goodwill is evaluated. Let us see question number 5. Asin and Shreyas were partners sharing profits and losses in the ratio of 2:1. They admitted Shyam as a partner for 1/5 share in profits. Now here the case is admission of a partner, and admission of a partner is a time when goodwill is to be calculated by the firm. For this purpose, goodwill of the firm was to be valued on the basis of 3 years purchase of last 5 years average profit. Profits for the last 5 years ended 31st March were 2019 rupees 1,25,000, 2020 rupees 1 lakh, 2021 rupees 1,87,500, 2022 there is a loss of rupees 62,500, and 2023 rupees 1,25,000. Calculate goodwill of the firm after adjusting the following. Profit of 2019-20 was calculated after charging rupees 25,000 for abnormal loss of goods by fire. So this is the abnormal loss which we have to eliminate in this year, that is 1920. So which is the year 1920? This is the year 1920. So we will adjust this abnormal loss in this particular year only. Let us see the solution. Solution 5 we will see. Profits of 5 years are given to us. So these are the profits of these years, and in the year 2021-22 there is a loss of rupees 62,000 which is shown in bracket. Now there is an abnormal loss also suffered by the firm in the year 2019-20, and this abnormal loss is of rupees 25,000. After treating abnormal loss in profit and loss account, the profit is rupees 1 lakh. If abnormal loss was not there, we have to take that situation. So we have to eliminate abnormal loss, and abnormal losses are eliminated by adding that abnormal loss back to the profit. So 25,000 abnormal loss will be added back in this respective year only, because this has been deducted in the net profit, and therefore the net profit of that year is rupees 1 lakh. Had this abnormal loss not there, the profit would have rupees 1,25,000. So in this particular year, our profit will be taken as 1,25,000, not as rupees 1 lakh, because there was an abnormal loss in this particular year. So based on this, we will calculate the average profit of 5 years. Remember that in the year 2021-22 there is a loss. So this loss is to be subtracted. When you are adding this, you will subtract this being loss. and the grand total here is rupees 5 lakh. 5 lakh is the total profit of past 5 years. Now we will calculate average profit. Average profit is rupees 5 lakh divided by 5 because 5 years profit is given. So average profit is rupees 1 lakh. Based on this 1 lakh, we will calculate goodwill. And the question says that 3 years, 3 times the average profit. It means the firm is expecting that this average profit of rupees 1 lakh will be earned by the firm in the next 3 years also. So based on this, because they have earned a reputation and they believe that 1 lakh rupees will be earned in the next 3 years also. Based on that, goodwill is calculated, average profit multiplied by 3 years, and this 3 is 3 years purchase. Fine, and that is the meaning of 3 years purchase, that expected profit, the same profit is expected in these many future years, and goodwill is now rupees 3 lakh. That's the answer. Now let us see question number 6. Madhu and Vidhi are partners sharing profits in the ratio of 3:2. They decided to admit Manu as a partner from 1st April 2023 on the following terms. Manu will be given 2/5 share of the profit. Goodwill of the firm will be valued at 2 years purchase of 3 years normal average profit of the firm. Now 2 years purchase means the same average profit is expected in next 2 years. Fine, and normal average profit. So there are some abnormal profits or losses given and we have to eliminate those. Profits of the previous 3 years ended 31st March were 2023 profit rupees 30,000 after debiting loss of stock by fire rupees 40,000. So there is a abnormal loss in this year. In 2022 there is a loss of rupees 80,000 which includes voluntary retirement compensation paid rupees 1,10,000. So it is also an abnormal loss. In the year 2021 profit of rupees 1,10,000 which includes a gain of rupees 30,000 on the sale of fixed assets. So this is abnormal profit. Calculate the value of goodwill. So let us see how it is to be solved. So solution 6. Because the firm is admitting a new partner, it is time for the firm to calculate goodwill. Fine, we don't have to do anything with profit sharing ratio or the portion of profit which the new partner will be receiving. We just have to concentrate on calculation of goodwill. So 3 years profit is given to us in this. 30,000 profit, rupees 80,000 loss, and rupees 1,10,000 profit for the year 2021. But there are certain abnormalities in this profit. Fine. The first year's abnormality is there. There is a loss by fire. So a fire broke out and there was a loss of rupees 40,000. So we will add back this abnormal loss because this abnormal loss is not a regular feature. Therefore it is abnormal. Fine. Fire will not happen every year. Accidentally, by chance, it happened in a particular year, in a year, but it may not happen every year. So it is to be eliminated so that we can get the right amount of average profit so that our goodwill is not miscalculated. In the second year, there was a loss of rupees 80,000, and here also there is an abnormal loss which includes voluntary retirement compensation paid to employees. Some of the employees have taken voluntary retirement, and as a result compensation to them of rupees 1,10,000 was paid by the firm. So we will add back this abnormal loss. And in the year 2021 there is a abnormal gain. This abnormal gain is related to sale of fixed asset. Some fixed asset the firm has sold at a profit of rupees 30,000. So it is there included. So we will eliminate this abnormal profit. it being abnormal profit, it will not happen every year, and as a result it is not generated out of regular business activity, and therefore it will be eliminated. Fixed assets like furniture or some fixtures, something they might have sold, and it has resulted in a gain of rupees 30,000, so we will eliminate. Now the whatever profit we get are the normal profits of those years, and this is 70,000 rupees, then 30,000 rupees, and here when you add it is 80,000 rupees, grand total of which is rupees 1,80,000. Now we will calculate average profit. $1,80,000 divided by 3. 3 years profit is given, so 3. So average profit, normal average profit is rupees 60,000. Based on this normal profit only goodwill should be calculated. Fine. And goodwill. The question says that average profit and 2 years purchase. 2 years purchase means the firm is expecting this normal average profit in the next 2 years also. So based on that our goodwill is calculated. 60,000, that is average profit, multiplied by 2, and the answer is rupees 1,20,000. Now let us see question number 7. Tarang purchased Jyoti's business with effect from 1st April 2023. Now when there is transfer of ownership in business, that is also a time when goodwill is to be calculated. Here one business is sold to another person. So in order to assess the correct purchase consideration of the business, goodwill being an asset has to be calculated, because goodwill is something which will help the business to earn more profit, right? Due to reputation or location or some partnership contracts, the firm is in a stronger position to earn more profit than the normal profit. So it is an asset. So when the business is transferred, we will try to assess the earning capacity of the business, based on which the goodwill is calculated. Profits shown by Jyoti's business for the last 3 financial years ended 31st March were 2021 rupees 1 lakh, which includes an abnormal gain of rupees 12,500, 2022 rupees 1,25,000 after charging an abnormal loss of rupees 25,000. In these both years there is some abnormalities. In the first year there is abnormal gain, which is here in 1 lakh rupees net profit, so we will eliminate this, and this abnormal loss will also be eliminated from this year. And in the year 2023 there is a profit of rupees 1,12,500, excluding rupees 12,500 as insurance premium. So in calculation of this amount, insurance premium has been neglected or ignored. Now we have to take it back in this profit. Calculate the value of firm's goodwill on the basis of 2 years purchase of average profit of the last 3 years. So 3 years profit is given, but these are not normal profits. We have to convert these profits into normal profit, and then 2 years purchase goodwill will be calculated. Let us see the solution. So solution 7 we will see. 3 years profits are given, but these profits carry some abnormalities. So in the first year, the abnormality is, in this year particular, abnormal gain of rupees 12,500 is also added here. So we will eliminate this abnormal gain, because it will not happen every year regularly. So abnormal gain is eliminated. Then in the year 21-22 there is an abnormal loss. Fine. Abnormal loss. What type of abnormality is not given in the question, but it being abnormal loss, we will eliminate it from the profit by adding it back. Fine. Had this loss not been there, then we would have earned a profit. So that profit will be addition of this abnormal loss. So we will add it back. Now in the third year, insurance premium is excluded here, but insurance premium is an expense which is to be charged in profit and loss account. Fine, it is an operational expense, so we need to take it into consideration when calculating profit. So we will subtract it because it is a expense and it is compulsorily to be charged to profit and loss account. So we will get normal profits for the 3 years, that is 87,500, and here we get rupees 1,50,000, and here we will get 1 lakh rupees, grand total of which is rupees 3,37,500. Now average profit. Average profit means 3,37,500 divided by 3. It is 1,12,500 is the average profit. Now goodwill. So it is a clean profit, it is a normal profit in which all the sorts of abnormal profits or losses are not here. So this is the right amount to calculate goodwill. And the question says 2 times the average profit, 2 years purchase. So the amount of goodwill is rupees 2,25,000. This is our answer. Question number 8 now. Abhay, Babu and Charu are partners sharing profits and losses equally. They agreed to admit Daman for equal share of profit. For this purpose, the value of goodwill is to be calculated on the basis of 4 years purchase of average profit of last 5 years. These profits for the year ended 31st March were 2019 rupees 1,50,000, 2020 rupees 3,50,000, 2021 rupees 5 lakh, 2022 rupees 7,10,000, 2023 there is a loss, bracket means loss of rupees 5,90,000. On 1st April 2022, a car of rupees 1 lakh was purchased and debited to travelling expenses account, on which depreciation is to be charged at the rate of 25% per annum. Interest of rupees 10,000 on non-trade investment is credited to income for the year ended 31st March 2022 and 2023. So the details related to abnormal losses are given here. So these abnormalities we have to treat in the respective years in which they have occurred. Calculate the value of goodwill after adjusting the above. So let us see the detailed explanation of it in the solution. So solution 8 we will see. 5 years profits are given to us. And there is a loss in the year 2022-23. So brackets are shown. And the question says that a car was purchased on 1st April 2022. So which accounting year it was purchased? It is this accounting year in which a car is purchased. And car being a fixed asset, it cannot be charged to profit and loss account. But by mistake, the car was treated as traveling expenses. So traveling expenses is a revenue expense and it was charged in profit and loss account, which has reduced this profit. So car will be, when we exclude traveling expenses from the list of expenses, the profit will increase. So here in this case, the loss will decrease. So we will add back rupees 1 lakh because we are eliminating traveling expenses. Fine, it is not traveling expenses. It is a car. So car is not charged to profit and loss account, but its depreciation has to be charged. So depreciation at the rate of 25% because it was purchased on 1st of April. So for the whole year depreciation will be charged, 25% of which is 25,000, and it is an expense. So its nature is minus. Fine. Then Next is non-trade investments interest we have received. So interest is received which is non-trade in nature, and non-trade investments interest is a abnormal income, and in which year 2022 and 23. So from both the years we will eliminate 10,000 rupees interest, that much only. Now whatever profit we get, these are the normal profits of the years. Fine, here it is 1,50,000, 3,50,000, 5 lakh. When you subtract this, you get 7 lakh, and when you add all these, you get rupees minus 5,25,000. Fine. Now we have to take average profit of these profits, so we will add this. Grand total of which I am writing it this side, it is 11,75,000. Okay, now average profit. Normal average profit, actually it is 11,75,000 divided by 5. It is 2,35,000. This is the normal average profit of the business. Based on this, goodwill is to be calculated as suggested in the question. Average profit into 4 years purchase means the firm is expecting the same average profit in the next 4 years also. So it is 2,35,000 multiplied by 4, and the amount of goodwill is rupees 9,40,000. This is the answer. Now let us see question number 9. Bhaskar and Pillai are partners sharing profits and losses in the ratio of 3:2. They admit Kanika into partnership for 1/4 share in profit. Kanika brings her share of goodwill in cash. Because Kanika is the new partner, and admission of a partner demands calculation of goodwill, and in this case Kanika brings her share of goodwill in cash. Whenever a new partner admits in the business, the partner has to bring his portion of goodwill, and for that purpose goodwill is to be calculated at that point of time. Goodwill for this purpose is to be calculated at 2 years purchase of average normal profit of past 3 years. Profits of the last 3 years ended 31st March were 2021, there is a profit of rupees 50,000 including profit on sale of asset rupees 5,000. 2022, there is a loss of rupees 20,000 which includes a loss by fire rupees 30,000. 2023, there is a profit of rupees 70,000 including insurance claim received rupees 18,000 and interest on investment and dividend received rupees 8,000. Calculate the value of goodwill. Also calculate goodwill brought by Kanika. Let us see the solution. Solution 9. 3 years profit and loss is given here. In the first year there is a profit of rupees 50,000, second year there is a loss of rupees 20,000, and third year there is again a profit. Now some abnormalities are included here in the profits or losses which we have to clean up, which we have to eliminate. In this year 2021, there is a profit on sale of asset. Some assets are sold at a profit which is included here, which is an abnormal gain, so we will eliminate it by subtracting it rupees 5,000. And in the second year 2021, there is a loss of 20,000. It has happened after charging loss by fire rupees 30,000. This loss by fire is also an abnormal loss, so we will add back here. We will eliminate. To eliminate a loss or expense, we have to increase the profit. So we are increasing the profit. Here in this case there is a loss, so we have to add it. Fine. In the third year there is a profit of 70,000. which includes an insurance claim received. So it is an abnormal profit, we will eliminate it. And there is dividend on investments, so again we will eliminate rupees 8,000. Now whatever profit we get is the normal profits. In the first year it is 45,000, second year from loss it has turned to a profit of rupees 10,000, and third year is 44,000 rupees profit, grand total of which is rupees 99,000. Now average profit, $99,000 divided by 3, because 3 years are here, so 3, which is equal to rupees 33,000. Now goodwill. As per the question, goodwill is to be calculated 3 years, not 3 years, 2 years purchase. So 33,000 multiplied by 2, which is equal to rupees 66,000 is the goodwill of the firm. And new partner Kanika is joining. So Kanika's goodwill. Kanika's goodwill, 66,000 is the firm's goodwill, and Kanika is supposed to bring her portion of goodwill, which is 1/4. So because Kanika is getting 1/4 share in the profit, and therefore her responsibility is to bring 1/4 portion in the goodwill, which is equal to rupees 16,500. That's the answer. Now let us see question number 10. Sumit purchased Amit's business on 1st April 2023. So when the business is bought and sold, at that time also goodwill has to be calculated. Goodwill was decided to be valued at 2 years purchase of average normal profit of last 4 years. The profits for the past 4 years were 2020 80,000 rupees, 2021 rupees 1,45,000, 2022 rupees 1,60,000, 2023 it is 2 lakh. Books of accounts revealed that there are certain abnormalities in these profits, which are: abnormal loss of rupees 20,000 was debited to profit and loss account for the year ended 31st March 2020. So there is an abnormal loss in this particular year. A fixed asset was sold in the year ended 31st March 2021, means this year, year ended 31st March 2021, and gain of rupees 25,000 was credited to profit and loss account. So this abnormal profit is related to this particular year. In the year ended 31st March 2022, it is talking about this particular year, assets of the firm were not insured due to oversight. Insurance premium not paid was rupees 15,000. Here insurance premium was overlooked, and insurance premium is not paid rupees 15,000. So it is an outstanding insurance premium which we have to include. Fine. So this will be treated in this particular year. So let us see the solution. Calculate the value of goodwill. Solution 10. 4 years profit are given to us, and in these profits there are certain abnormal losses or abnormal gains which we have to eliminate. So it is said in the question that there is an abnormal loss of rupees 20,000 in this particular year. Fine. 31st March 2020, abnormal loss. So it has been charged to profit and loss account, and which has reduced the profit. So when we eliminate that abnormal loss, we will add it to the profit, because our profit will increase, because it is now excluded from profit and loss account. Then second is that there was a fixed asset sold, and a gain of rupees 25,000 happened in this year 2021. Fine. So this 25,000 abnormal gain is included here, so we will eliminate it by subtracting it, 25,000. Then in the third point it said that insurance premium was overlooked in this particular year 2022. Insurance premium has been overlooked because it was outstanding, but we have to take it in calculation of net profit, which is not charged to profit and loss account. So we have to charge it. So when we charge it, we will subtract the profit by rupees 15,000, which is the insurance premium amount. Now in the fourth year there is no abnormalities. So our normal profits are rupees 1 lakh, rupees 1,20,000, and then here when you treat this, it is rupees 1,45,000, and here it is 2 lakh. Grand total of which is rupees 5,65,000. Now average profit. Normal average profit 5,65,000 divided by 4 years profits are given, so divided by 4, and our average profit is 1,41,250. Goodwill. Average profit multiplied by 2 years purchase, which is equal to rupees 1,41,250 multiplied by 2, and you get an amount rupees 2,82,500. So this is the amount of goodwill for the firm, and it's an asset. I hope that you have watched the full video without skipping it, because it is very important to get the details so that you are very much confident on the topic. Despite this, if you are having any doubt, please put it in the comment section. Thank you so much for liking, subscribing and sharing this channel, and thank you again for watching this video.